Today is Thursday, July the 16th, and let's just, you saw the motion during the day. The Dow came up and touched yesterday's close and then dropped. So there's some concern out there. The Colon oscillator has turned down. The stacked volume looks something like this. This was a pretty low volume day. So it got me looking at something different, which is an advance to declining volume. So it's this volume chart here. The number of advancers to the number of decliners traded, not the number of stocks, but the number of shares that advances versus the number of shares that declined. And of course, it's choppy all over the place. You can see that when the market goes down, volume increases in both directions as it goes down. Same thing when it goes up, but it's a little narrower when it goes up. You don't see the same fluctuations. But what's more important is this 20-day moving average. And you can see it's right now at 0. The moving average, the middle point of these highs and lows just hasn't changed for 20 days. And it's pretty evidenced by the volume. We just haven't got the volume. The buying volume, these green here is just pathetic when you compare it to back here when we saw the market starting to rebound up here and rebound up here. Look at these green days and here as well. But are you seeing it now? No, you're not. So be very careful. I've been warning about this for a while, but the market has still been going up. But it's getting choppier, and the day of reckoning, I believe, is coming. Now, the Dow Jones Industrial Average was rejected at the top of the gap. This is what we expect to see. So now let's get rid of that gap and start focusing in on others. This is going to be a new high, new recent high, but now we've got a lower high, and we'll see if we continue in that direction. But we've got, compared to this one, we now have a lower high. The SPX stayed above the trend line, but finished with a perfect little doji. The NASDAQ, this is the weekly. Let's take a look at the daily. The daily is also pulling back. Apple down $6. Now remember, Netflix reported after earnings right at 4 o'clock and tanked immediately $50. And the last I checked is still hanging out around that point as well. And so that's going to be down percent. That's going to affect the tech index tomorrow. Caterpillar, still, it has completed the Gartley. Now this would have been at 78.6 target. Instead, it's come up to the 100% area. So it's a little bit above a normal Gartley, but it's within this cone of acceptability, and it's moved down. So we would expect to see Caterpillar do a little bit of a down before any resumption up. FCX, which I'm no longer in, is starting to move down. Home Depot, which of course I am in with next week's short 240, 250 calls, finished up at 258. So I am glad that I rolled, otherwise I would have lost my stock this week. I really want to keep the stock, but I see it suffering as the coronavirus starts to kick in a little bit over the summer. People are tired of staying home. Maybe they've done all of their home projects. So we're going to see, this is a double top here. So I'm going to hold on to Home Depot, but I'm going to do it by rolling and playing with my short 245 and 250 calls. I'll make that decision next Wednesday. Amazon, this is a weekly chart. You can see it's retreating a little bit. Let's just take finally a look at the banks. And the banks were all in the green today. Morgan Stanley, which I don't have here, should have had a good day, but everybody else, JP Morgan was flat. Everybody else pulled back. So be very careful. To me, the telling chart is this new one that we're going to start looking at, where our 20-day moving average volume now is neutral. It's 0. And the last time we saw that right back in here, what happened to the market? It dropped. So let's keep an eye on that.